What is wealth creation? And how do we go about creating wealth from the financial market?
Investment is primarily the process of purchase of monetary asset with the idea that that asset will give an income in the future, or it can be sold at a higher price, thus giving out a profit. Investments primarily are of two types. There's fixed income and there's variable income. Fixed income investments are in debt, bonds, fixed deposits, where a certain interest payment is paid out at a fixed interval, and the certainty of getting that money is pretty high. Variable income investments are investments done in assets like real estate, equity, commodities. Here, the certainty of getting the income is not there, and even it can result in losses. So, given the risk profile, fixed income investments would give lower returns over time, and variable income investments would give higher returns over time. So a good investment carry a few attributes. There should be low volatility in the investment. Like if you take an example of fixed deposit, for say if you have invested 1 lakh rupees at 7% for a year, with surety that you will get 1,07,000 rupees after a year, and so your income, and all during the year there is no doubt whether you're going to get a principal. So there's absolutely no volatility. Whereas on the other extreme, an equity investment, the share prices fluctuate up and down. So every day you will feel that either I'm making money or losing money. So the volatility is much more higher. Then another attribute of a good investment is the longevity of the investment. Now, certain investments, while they give good returns, but it's only for a short period of time. Whereas if you have invested in certain compounding stories like HDFC, Asian Paints, Hero Honda, these companies would have given you 25% returns over a 2 to 3 decades. So the longevity is also another important aspect. Then obviously the third aspect is the risk adjusted returns. So any investment where you feel that the risk adjusted returns are higher make for good investments. So looking at the two extremes, at one level you're making a fixed deposit investment at 7%, so you're pretty sure that you're going to get that money. Now think of another scenario. You buy a biotech stock with leverage in the futures and options, and whose drug is going to come up for approval for a cancer cure. Now, maybe you invest 1 lakh rupees in that. Now, if the drug gets the approval, then your 1 lakh could become 5 lakhs because of the leverage and the fact that finally the company would have a positive cash flow. But on the other extreme, if the drug is not approved, then your entire capital is going to be wiped out. So given such a scenario, so at one level you have a surety of a return, and the other level there is a very high probability that you will lose your capital. The risk reward is spread out. So the simple statement, higher the risk, higher the reward, holds true for most of the investments. But there are times when because of market circumstances or certain events, the risk reward comes in your favor, and that is the time when astute investors look for those mispriced bets. So mispriced bets are those where the basically the risk reward is skewed in your favor when you make those investments. And so an attribute of good investment could be that it's mispriced, and hence you hope to make better returns. So the factors, one is the time horizon. If somebody needs that money within a year or 2 years, then they should only invest in fixed deposits or debt instruments where they can pull out their money without any loss of capital when they need it. Uh, and whereas if you want to invest in equity, your time horizon needs to be upwards of 3 years, because in the short term, your principal could actually go down because of the volatility in the market or some other events have playing out. So, so one is time horizon. Another aspect is the frequency of income. Now, suppose you need a certain amount of money to maybe plan for your holiday, or you need to for your education of your kid, then it is much more prudent to invest in a fixed income strategy where that income, the certainty of getting that income is there. And if you are okay with the variability of the cash flows, then you tend to invest in variable income strategies like real estate or debt. Then another attribute when you decide on is your risk appetite. Like my risk appetite could be very different from a risk appetite of a person who's retired from a government job and and is looking for surety of maintaining his lifestyle. So depending on the risk appetite, people will tend to look at investments in a very different way.